let's try to understand the input method. So input method is like how much labor hours you have given or other things you have given. Let's take the example of Deloitte company. Now Deloitte has signed a contract to provide $120,000 of consulting services over 3 months, which is like, and they are saying that expected labor hours will be 600 hours. So we can say on a monthly basis Deloitte will be providing them 200 hours of work. Now, how the revenue recognition will be done? We can simply say that out of 600 hours, 200 hours work done, meaning 33% is work is done. Then out of this entire revenue to be recognized, we can simply say that if this $120,000 was required to be recognized, only 33% of that has been completed, which is 1/3. So we can recognize $40,000 here. So basically these are the input hours which needs to be incorporated out of the 600 hours. So this is simply the input method. Now let's try to understand the textbook definition of input method, which is like revenue is recognized based on efforts or inputs used to complete the performance obligation. Whatever you are going to perform, how many efforts are there? Now the common input measures can be whatever cost you have incurred or what is the expected cost, so comparison of that, or there may be resources consumed just like labor hours, or specifically labor hours is also mentioned, and again the time may have passed, like you might be working for 12 hours and out of those 12 hours you already have worked for 4 hours, so it will be 4/12. Okay, so these are again the example of input method. Now there are certain disadvantages with input methods as well, which is like efforts may not exactly match the value delivered, because like the people who are working to deliver this project, they might be doing, let's suppose, accounting, or their accounting is like they need to file 100 returns, income tax returns, right? So when they need to file those 100 income tax returns, it may be possible that out of those 100 only 5 have been filed, but a month has already been passed. So sometimes the input may not be in proportion to what the value has been delivered. And lastly, if inputs are used evenly, revenue can be recognized on a straight line basis over the period of time, which means that inputs can be used evenly, like 200 hours every month. Then you can simply say that this 200 hours every month will be done for all the 12 months. So it itself becomes a straight line, right? Because the ratio of all these 200 hours will become 1:1:1:1 and so on. So it itself automatically becomes the straight line method.